The stock market is now open. We are watching to see how China's halt in trading will affect Wall Street. And joining us now is David Nelson, Chief Strategist for Belpointe Asset Management. David, thanks for being with us. You know, when you look at this almost feels like deja vu, right? We were here just a few days ago when we saw the same kind of situation, a very sharp drop in the Shanghai Composite Index. Trading was halted, jitters spread here. Tell us about what we're going to be looking at today. Here we see the market's down already, more than 200 points.
Yeah, and we could be down as much as 300 at the open. At least that was the indication, you know, when I was on the way in. Look, it's going to be a very concerning time for investors this morning. It's going to be a rough open. I think look at this a little later in the afternoon. How we close today is probably a lot more important than how the market opens today. This, like you said, it was caused by China. There was a trading halt there. Within 5 minutes, you know, the markets were down pretty hard. And then they were traded was halted for the day within 30 minutes. It was a currency problem because the yuan has been falling, and they're letting it fall because it will help spur export activity for them. But I think a lot of people have concern, and they're starting to pull their capital out of the country. And the retail investor there is in a panic mode right now. They're just hitting the sell button.
And there's been a lot of talk about whether or not China's economy is slowing down, which is freaking everyone out because it's the second largest economy. And I imagine that means, you know, every country is sort of connected in some way.
I don't want to sugarcoat it. It is a concern. It's not the end of the world, but look right here in this country. Almost every major U.S. multinational U.S. company-based company has spent a good deal of time and money in China. And this was going to be the next engine of growth. Well, what if it isn't? What if that is not an engine of growth? They're going to start to rethink their investment there. And growth here in the United States is flagging. Right now, we're in a manufacturing recession here in the United States. We have some bright spots. We're a service economy. That's doing well. But this is a concern, and valuations aren't cheap right now. So some things are going to get hit, and people are going to have to look through their portfolio and see what they should be in.
I want to ask you sort of a bigger picture question here as we continue to keep our eye on the markets, now down almost 270 points. Is part of the problem that it is difficult to determine how reliable data is coming out of China?
That's a very good point.
We're not talking about, you know, a completely capitalist kind of system, obviously. And it's in some ways it seems almost like this experiment by the Chinese government to try and have this veneer of capitalism, right? But at the same time, the government is very much involved.
They're very much manipulating the situation there. Look, it's an opaque society. For me, as a Western portfolio manager, it's very difficult for me to put capital there because I can't really rely on the data. I can't really trust the data. I can't even trust the accounting there. That's what I rely on as an analyst. When I look at a spreadsheet, I want to know that those numbers are real.
You don't know what they're not telling you.
I don't know what they're not telling us right now. And it's not even just that. There's a geopolitical equation to this as well. We're going to butt heads with China, you know, for the next decade. We're going to meet them on cyber intrusion, cyber terrorism. We're even meeting them, you know, militarily over areas like the South China Sea. So all of this plays into a pretty uncomfortable dynamic. You mix that with the geopolitical chaos that investors are seeing around the world, it's a pretty toxic cocktail to wake up to in the morning.
Yeah, can we talk a little bit about some of the other issues? The currency there you mentioned, but oil too.
Yeah, look, oil went up because of China and is coming down because of China. That's only part of the dynamic. We're drowning in oil. In a world where the OPEC pumps full out, the United States now pumps more than it imports. The lower for longer rhetoric really rings true. Now, it's a blessing and a curse. Cheap oil, it's great at the pump, and it puts more dollars in our consumer wallet. But if you live in an energy-producing state today, that could mean lost jobs. And what concerns me as a strategist is it's starting to spill over into other sectors. Bank of America's CEO, Brian Moynihan, is on record. He's instructed his loan officers to relook at the credit profiles of many of their customers that live in those energy-producing states. That's a concern.
So when you look at sort of the bigger picture, again, for your typical small-time investor here in the United States, and they're constantly hearing this steady drumbeat of uncertainty regarding China. They're seeing these very shaky sort of market openings. What is your advice? I know you said you don't want to sugarcoat anything, but it's hard for people not to have a sense of rolling panic.
And there is really no small-time investor because when it's all your money, you know, it's big time to you. It's big time to you. But you got to relook at your portfolio. If you're looking at your 401k and if you're approaching retirement and you've got all your money in stocks, your portfolio is upside down. You need to rethink that. You need to reallocate, and you need to do it quickly. All right? You don't want to have another 2008 on your hands. I'm not predicting anything like that because my crystal ball is, frankly, a little cloudy. But you need to be diversified. If you're 20, 30 years old, this is a bump in the road. It's nothing. You're just going to ride through it. But there are asset classes out there. There are programs out there that can help at least, dull the pain a little bit.
Yeah. That's good advice, I think, anytime.
Yeah,
right?
Unquestionably. Look at your portfolio. There's going to be winners and losers today. There's going to be opportunities for investors, and there are sectors of the economy that are doing well. And I'm going to leave you with one bright note.
That's nice.
It's not all bad. Look at the jobs market right now. Job numbers are pretty good. The ADP numbers yesterday were better than expected. We're going to have a jobs number in the morning. Job openings in this country have now gone up to 5.4 million. And when you compare that to continuing unemployment claims, which are now all the way down at 2.1, that's some cause for hope. It's not all dark out there.
Thank you for the silver lining.
Right. David Nelson, thanks so much for joining us. Appreciate it.
Thank you.